Hello friends, welcome to another Stock Valley video. In this video, we will be talking about Apple stock with you. Apple stock is one of the stocks that has been in a good uptrend recently and is currently sitting at the top of the channel in this uptrend. How did we get here? Why did we get here? We are trying to share the answers to these questions and all our foresights from now on in this video with you, both technically and fundamentally. Let's see. We hope it will be a good video for you. Let's start right away. When we evaluate Apple stock technically, as you can see, we can see that it is inside an uptrend. If we draw a Fibonacci retracement level here, let's examine together what we can see as future targets if you like. Let's make a few adjustments here now. Enter the small numbers. The places to be taken as targets to be seen in the first stage will be these. Let our first level be this. Probably let's do something like this back, the 272 level. If we already see that we cannot break the top right now, we couldn't go above the 288 level. If we can, with maybe a slight pullback movement to the $281 levels, and even to say it clearly, we hope it can see the 280 psychological support here. This would be a nice buying spot. If it can't hold there either, sags down to the 262 and 247 levels can occur with the downward pull. Likewise, if it goes above the $290 level here, the $320 level we showed here is one of the places that can be seen as a target in the first stage anyway. From the indicators here, 14 out of 25 indicators have given a buy position, 9 are neutral, and 3 show a sell direction. If we want to look at the fundamental analysis side, let's look at the total revenues. I have specified a small note here for those who don't know anyway, and the system we wrote here shares with you what each instrument means. We made a simple, nice thing like this. We will try to explain it to you simply without going into too much detail. If you want, let's start with total revenue. What was total revenue? First of all, let's define it if you want. It is the total revenue obtained from the company's operations. It can also be considered as the main engine of growth. It decreased by 27.2% over main sales, and there is a decrease. We can already understand this as you can see in the last period on the graph right now. Afterwards, we noted down here that the slowdown in tablets seriously affects the company's ability to generate cash. Let's see what it says in the income statement next. In gross profits are the profit a company makes after deducting the direct costs incurred in the production of goods and the cost of goods purchased. Cost inflation severely affected the company, and its gross profit decreased by 20.9% compared to the last balance sheet period. They haven't reflected the price increases to the customers yet, and they haven't managed not to reflect them either. Let's see what we said for net profit for you. In net profit too, if we want to look at its definition first, it is the ultimate profit remaining after deducting all operating expenses, taxes, and interests. A slowdown is already seen in profits. As you can see right here, look, and fortunately, there are drops from the $42 billion level down to the $29 billion level. What does our system recommend to us? Profitability continues, but it shows that it makes a loss at a rate of 29.7%, meaning a loss is made from profit. Actually, it brought out a note for us here saying that operating expenses might be increasing faster than income. Now let's come to our next one, total assets. What were total assets good for? First let's talk about that, then tell what the table here tells us. Total assets are everything of value that the company owns or controls. We said it represents the total scale. And you will see a contraction in the balance sheet. Assets decreased by 2.2%. If this is a strategic move to reduce debt, meaning if we are reducing assets by paying debt, this is actually a good thing. However, if assets are sold while debt is high, this could mean danger. Let's look at current liabilities. What were current liabilities? Since there is already a decrease in current liabilities, this looks like good news for us. Our current liabilities are the short-term financial obligations of the company that are due within 1 year. It supposedly shows the liquidity risk. We are also getting rid of the debt burden. This is great news to pay off our debts. Short-term urgent debts decreased by 110% at a rate of 17.1700. The financial pressure on operations is ending, and this lowers future interest expenses. Our next thing is equities. Total equities. What did it tell us in total equities? It shows the net free remaining assets to the shareholders after deducting all liabilities, that is, as the book value here. Flawless balance sheet. We also showed it here as the golden ratio. We also see here that while the company reduces its debts, which is the dream of the shareholders, it expanded its equity by 20.8% and followed a highly defensive profile. Let's move forward a bit slower. What is this? Operational operating cash flow. In cash flow 2, as you can see here, there is a slight contraction. Free cash flow and net cash change tables are already shown here. Our values are also present at the bottom here. You can look from the video there to for Apple. That's all we will say in this video as of now. As we said, on a technical basis, the graph still shows that its direction is up. Maybe in the future process, a slight profit sale might come, just like in this range and this range. We will examine these together as the stock goes. If you have watched the video up to here and liked our analysis on both the technical and fundamental sides, don't forget to press the like button. You can subscribe to the channel if you want this and similar videos to come. Also, if you share this video, you will have done a very useful thing for us. Lots of profits to you all.